Hello traders, welcome to the SimpliTrade YouTube channel. So we're going to be looking at how to identify valid institutional pullbacks. A lot of traders face challenges in identifying valid institutional pullbacks, and that plays a disadvantage to them in identifying valid institutional market structure. Because you can't mark structure without understanding what pullbacks are. Because structure is made up of the impulsive movement and the pullback movement, what we call retracement or what we call the corrective movements. So for us to be able to mark out valid institutional market structure, then you must understand how to identify valid pullbacks. So this particular video is going to address how to identify valid pullbacks. In the next lesson that I'm going to be making available to you guys in the YouTube channel, we're going to look at how to identify institutional market structure. But then we can't treat market structure without understanding pullbacks, because as I've said, the market structure is made up of the impulsive movement and the pullbacks, or what we call corrective movements. So what we can see here from the screen is we have this chart example. This is basically candlestick example I'm going to use to explain this. We're going to look at the real-time chart example on how to identify these pullbacks. But this particular session and this particular example you're seeing displayed on the screen is to show you an example to how to identify them from the real candlesticks in the markets. So what we can see here is we have this bearish movement of price to the downside. These three black colored candles are the bearish candles. The green candles are the bullish candles. And basically what we mean by bearish movement. Bearish movement is a downward movement. Bullish movement is the upward movement. So we have the downward movement of price here to the downside. And what you can see is that candle A give us the lowest low points. And market structure is made up of what? Swing lows and swing highs. And these swing lows and swing highs are formed by the candlesticks. So what you can see here is we have candle A has given us the lowest low points. And we have candle B trading to the upside. So you can see this is the impulsive movement. This is the pullback movement. So the pullback movement is actually the movement against the ideal market direction. So we have the fall of price to the downside, and this is our lowest point. So it means that whatsoever trades to the upside and takes out the high of candle A, because candle A gave us the lowest low point, that validates that as a pullback. When price trades to the upside and takes out the high of candle A. So it means that now we've established a valid pullback. So you can see here that candle A gave us the lowest point. Candle B traded to the upside, but then candle B did not take out the high of candle A. So it means that the high of candle A is still protected. Therefore, we do not have a valid pullback yet, even though we can see that the movement of candle B is against candle A. So candle B did not take out the high of candle A. So we do not have a valid pullback yet. So furthermore, we can see price push further to the upside, and candle C took out the high of candle A, and furthermore also the high of candle B. So where is the candle that gave us the lowest low point? It is candle A. Candle A gave us the low points. Now you can see the corrective movement to the upside. Candle C took out the high of candle A, meaning the high of candle A is no longer protected. It has been purged. It has been taken. So we have what? A valid pullback established. So for you to establish a valid pullback, it means that the corrective movement must take out the high of the last movement or the last candle that created the low. That is in a bearish market condition. We're going to look at this from a bullish market condition, but let's pay attention to the bearish side of this particular example. So we can see now that candle C traded to the upside, taking out the words high of candle A. So we have a valid pullback. Price has established this high points and now traded to the downside, breaking this low. So it means this low is no longer protected. Price has taken it. Candle D has broken through it. Now what you can see here is that candle D gave us the low points, created the new low points. And now this is the high of candle D. So the high of candle D is protected. For us to have a valid pullback, it means that the high of candle D must be taken, because candle D created the low points, the new low points. Because here we have a low, a high, a lower low. So candle D created the lower low. So for us to have a valid pullback, its high must be taken. And what we can see is that candle E traded to the upside, gave a pullback movement. but yet not a valid pullback movement because the high of candle D that created the low point is still protected. So candle F also traded to the upside, but then failed to take out the high of candle D that gave us the low point. So it means in this market condition, we do not have a valid pullback. So how then do we map out the structure of this delivery? So clearly now what you're going to see is that we have the fall of price to the downside. This is our low point. We have a valid pullback here to the upside. Why? Because the movement to the upside took out the high of the candle that gave us the low point. And now we have a fall here to the downside. But what you're going to see is candle D gave us the low, but then the high of candle D is protected. So it means the movement of candle E and F are all within candle D. So this is not a valid pullback. So it means that this leg movement entirely is an impulsive movement, meaning from this high here to this low, we have what? A single leg movement. This is not a valid pullback. So let's make this line a bit thicker so that you can clearly see what I'm trying to point out to you guys in marking out the valid words pullbacks. So you can see here we have a pullback because candle C took out the high of candle A that gave us this low point. Now it has established for us what here? A high. And now price have what traded to the downside, creating a low. But this is not a valid low because the movement to the upside did not take out the high of the candle that gave us the low points. So it means that the movement from this high to this low is a single leg movement, is an impulsive movement. So this is not a valid institutional pullback. Are we together, guys? Hope you're following and getting what I'm trying to explain to you all. So what you're now going to see here from the next diagram we have here is this. We have this bearish movement of price to the downside. And here you have a bullish movement of price to the upside. A bearish movement, a bullish, a bearish. So what we can clearly see is that we have candle A, B, C, and candle D here. What you can see is that candle A traded to the downside. And then we have candle B traded also to the downside, creating the low of this price movements. But what we are going to see in candle B is this. Candle B took out the high of candle A before trading to the downside. So it means that what within candle B movement, we also had a pullback because candle B gave a corrective movement first. It went against the trend and took out the high of candle A. So it's an impulsive movement. So whatsoever movement that we have that goes against the impulsive movement and takes out the high of a candle within the impulsive movement have created a pullback. So you must not see a series of bullish candle first before you establish that a pullback has occurred in a leg movement. So you can see here an impulsive movement to the downside. Candle A was created. Candle B continued the impulsive movement. But before candle B gave us the dump to the downside, it traded high and took out candle A. So candle B created a pullback here. So what you can see, candle B gave us the low points here. But candle C and candle D did not take out the high of candle B. So it means this is not where we have the pullback movement. Because if you're looking at it, B gave us the low, but candle CD, furthermore with this bearish candle, did not trade to take out the high of candle B. So meaning the high of candle B is still protected. So it's not a pullback. This movement is not the valid pullback. And then we have the bearish continuation. What it means is that candle CD is within the candle B. You can see it's trading within the high and the low of candle B. So nothing took out the high of candle B. So the high of candle B is protected. The high of candle A is not protected because it has been purged by candle B. So what we can now see here is price further went bearish to the downside, creating this low point, which is candle F. So it means since candle F created the low point, whatsoever trade against the impulsive leg and takes out the high of candle F has established a valid pullback. And that is what we can clearly see here. Candle G traded to the upside, taking out the high of candle F. Candle F gave us the low. So G traded went against the high of candle F, took out the high of candle F. So we have a valid pullback here and then the bearish continuation. So how do we map this out? It means what we have here is this. We have the fall of price here and a pullback was created here. Because you can see what happened is that when price gave us this low here, candle B in its formation went up, took out the high of what? Candle A, and then fell to the downside. But here we do not have a valid pullback. So it means that this is the high that created this entire movement now to the downside here. So we can mark this level and say we have a pullback here because this movement did not take out the high of candle B. So now we have candle F created the low and candle G took out the high of candle F, creating here now a high point, and then we have a fall. So we've identified the valid pullback in this diagram and also identified the valid pullback in this diagram also. So what are we trying to say here? We have a high here that created an impulsive movement that created this low. And now we have a high here that gave us the bearish movement that has established now what? A low point. So this is how you identify valid institutional pullback. So this is a bearish condition. We're going to look at the bullish condition, and then we'll look at real-time chart example to explain how to identify valid institutional pullbacks. Here we have a bullish side to the identification of the valid institutional pullbacks. So what we can see here is we have the push of price to the upside. So we know in a bullish market condition, the impulsive movements is in the uptrend, is in the upside of the market, while the pullback is in the downside of the market, the movement that goes against the push to the upside. That is the pullback. So what we can see from this first diagram here, we can see the bullish candles, which are the green colored candles to the upside. And what you can see, candle A here gave us the highest points. So the bullish case study here we're looking at is the inverse of the bearish. So candle A has created the high, and now we have the low here. We have a new high created here. You get it, guys? So you know, in a bullish market condition, we are having market giving us a high, a low, a higher low, a higher high, a higher low. So here we have candle A has given us the high points. So for us to have a valid pullback in this bullish condition, then we want to see a bearish movement that would go against the bullish impulsive movement and would take out the protected low of the last candle that gave us the high points. That is what we need to identify. And clearly now you can see that we have candle A gave us the highest points, and we have the bearish movements to the downside where we can see that candle C took out the low of candle A. So meaning the low of candle A is no longer protected. It has been taken out. It has been purged. First here we can see when candle A gave the high, we had candle B traded to the downside, but did not take out the low. So candle B did not give us or create a pullback yet. It's candle C that created the valid pullback. So now we have a valid low point created and now an impulsive movement. So what you can see here is that candle D gave us what? The high. Now candle EF traded to the downside as though they were going to give us a valid corrective movement, but then failed to take out the low of candle D. So the low of candle D is still protected. So it means that we do not have a valid pullback yet. The movement of EF are all within candle D, within the high and the low of candle D. So we do not have a valid pullback established in this bullish scenario. So clearly mapping out the structure of these to identify the valid pullback, it means we have the push of price here to the upside. Since we can see that this movement took out the low of candle A that printed the high, so we have a valid pullback here to the downside. Now we have a bullish movement to the upside, creating a high. That is candle D created the high. But then what you can see, candle EF traded to the downside, but did not take out the low of candle D. So we do not have a valid pullback in this case here. So what we have is that this low gave us the impulsive movement that created a new high here. So that is our high. This is not really the high, even though we can see here it's a movement that created a high. The fact that this movement to the downside did not seek this low, we do not have a valid pullback to establish this as an impulsive movement and then consider this as a pullback. So we have the push here, corrective movement, and then a single leg push to the upside, even though we have this bearish movement within this impulsive movement. So this is now our structural impulsive movement. This is our structural valid pullback in this case. So now what we can see now in the next case study we have here, this diagram is this. You can clearly see that we have this push of price to the upside, And when price gave us the bullish movement, establishing the high, which is candle B. But before candle B was established, what we can see is that candle B gave us a movement to the downside that took out the low of candle A. But you can see that candle C and D did not give us a push to the downside to seek the low of candle B. So we really do not have a valid pullback within this bearish movement we're seeing here. So what it means, just like the way we looked at it in the bearish case study, what we have now is that we have this push of price to the upside. Before candle B was fully established, candle B gave a movement to the downside that seeked the low of candle A. So we had the push now, and then candle B was fully established. But what you're going to see is this. Candle C and D did not give us a valid pullback to seek the low of candle B. So we cannot really consider this as a structural point. So what it means is that this is the low point that gave us the impulsive movement that has created this new high point. And this is a new high point because you can see that the candle F gave us the highest point. It is not this bullish candle that gave us the highest point. It is candle F. And now we have a valid pullback because candle G further went bearish, seeking the low of candle F that gave us the high point. So we have a pullback established here, and now we have another impulsive movement to the upside. So now it means we've established the structural narrative in this case study we're seeing here by identifying the impulse movement and the valid institutional pullback. So this is the bullish case scenario to what we're going to look out for in identifying valid institutional pullbacks in the markets. So I've shown you guys how to identify valid institutional pullback from a bearish case study, and now I've shown you guys how to identify that from a bullish case study. So we're going to look at the real-time charts so that we can identify these institutional valid pullbacks. And then in the next episode, we're going to look at identification of institutional market structure. So if you really want to stay connected to this series of teaching I'll be releasing, then you can do well to kindly just subscribe to the YouTube channel so that you can stay updated when a new episode is released. So all you need to do is to turn on your notification button on so that once I make the next episode available, you'll be able to catch up with us and flow with the teaching series. So guys, let's look at real-time chart examples. So now let's use real-time candlesticks, the real-time charts narrative, graphical representation of price movements to actually look into the identification of valid institutional pullback. So we're going to look at quite a number of examples, but let's start with this. So let's look at this movement we're seeing here, and possibly we'll still keep looking at price as price gives us this movement. So what we can see here is we had this bearish movement. So let's look at the bullish side of things, and what you can see is price gave us this high. So price created a high here, but what can you see? A movement came to the downside, took out the low of this candle that created this high. So let's look at it from this narrative that we have this fall, and now what can you see here? Price pushed to the upside. It's a pullback here because this bearish candle gave us what? The lowest low point, and this movement went to the upside and took out the high of it. Now this created a high, and what can you see now? Price went bearish, took out the low. So this is a valid pullback. It is a valid pullback because price has given us a movement against this bullish rise of price to the upside. So we have a movement that took out the low of it. And now what can you see? We have this push further to the upside. So this bullish candle gave us the high points here. And there is a valid pullback because the bearish candle traded to the downside and took out the low points of this bullish candle that gave us this high. So we have a valid pullback here. And furthermore, we have what? A push to the upside. So this bullish candle created a new high point. Are you guys seeing the interpretation of identifying these pullbacks? So once you know how to identify these pullbacks, when we start looking at market structure, you will know how to identify market structure and know how to mark pullbacks that are actually inducements and liquidity. Because now what can you see? This bullish candle gave us the high. But now what do you see here? Price traded to the downside. Price took out the low of the candle that gave us the high point. And not just that, price dipped way much lower and took out this low point. Yes, this is a valid pullback. But yes, this pullback took out the low of this. Are we together, guys? So it is when we get to market structure, you get to understand more on inducements, liquidity. And what do we have now? A push here to the upside, but this is not a valid pullback, because even though you can see this is a bearish movement, but price did not trade to the downside to seek this what low point. So this low gave us this push to the upside. So this bearish candle gave us the highest point, because the high of this bearish candle is higher than the high of the bullish candle, and then we have a pullback within it. How is it a pullback? You can see this is a high. A corrective movement came and then took out the low of the candle that gave us the highest high points. And now we have what? This bullish movement of price to the upside. So this created a new high point here, and we had a movement that went bearish and took out the low. So we have another pullback here. And then the next thing we're going to see is we have this push to the upside. So we have what? This push to the upside. This created what? A new high point. And what can you see? Price traded bearish to the downside. And what we can see clearly is that price took out the low of this candle that gave us this high point. So we have what? A valid pullback here. Now you can see another case study. We had a push, and now price gave this what? Pullback, because this traded high, creating a new high, but within this range anyway. Price went against that, took out the low of this candle. Before, what can we now see? We have a push further to the upside. So price has given us this push to the upside, and furthermore, what can you see? We had a pullback to the downside, because this candle traded bearish and then took out the low of the bullish candle. So we have what? A fall to the downside here. So what you can see is we have this bullish candle, but this bullish candle is within the what? The low and the high of this bearish colored candle. So it means our pullback can still further be pushed to the downside. We also have again further this bullish candle took out the low of this, but then this movement did not seek this high. So we do not have like a pullback within this that we can classify this as trying to mark a bearish structure to the downside. So all we can see we have is this. We have this point here, because price now traded higher and took out this high. So we have a pullback here, and now price again traded bearish to the downside. So this bearish candle gave us this what? Low points. And what can we see? A bullish movement to the upside. So when price created this bullish high points, what can you see? A bearish fall to the downside. So this is how you identify the pullbacks. What do we see here? Price gave us a fall, a push to the upside, a dip to the downside here, because this candle took out the high of this bearish candle, because this bearish candle created the low. So we're supposed to place it here, created the low. Movement that took out its high. Price fell, took out this low that took out this high, because when price took out this low, we had a push. So we had a pullback here, and then a push to the upside. So when you go to a far lower time frame, you're going to see that this movement would give you what? Structures that would align to what you just map out here. So what we can see is the push now. This candle created the high, a pullback, took out the low. It's a valid pullback. And then a push, creating this high, and then a further deeper pullback. It's a valid pullback because it took out this low. Price further went, seek this liquidity and went bullish. Yes, you had a bullish movement here, but is this a valid pullback? No, because this movement did not seek any low points. So it means we have the entirety of this movement to this bearish colored candle that gave us the highest high, because the bearish colored candle high is higher than the bullish candle high. And then we had a push that swept the low of it. That is a pullback. And then a push again, creating a new high. Price fell, seeking the low. A push, creating a new high. Price fell, seeking the low of the candle that gave the high. So this is how you identify what? Valid institutional pullback. So we are going to look at more examples. Let's look at what price has done here so that we can see. So what you can see again here is this. We have this push to the upside here. Let's look at that. We have this push to the upside. And what you can see is that this bearish color candle and this bullish candle all have what? Equal high points. So it means that if price takes the low of the bearish colored candle, it is still a valid pullback, because the bullish candle and the bearish colored candle have equal highs. So it means that we have what? A pullback here. Price went, creating this high. A pullback. Why a pullback? It went against this candle that created the high. It took out the low. Now we have this what? Push. to the upside. Do we have a pullback? Yes. Price traded what? Bearish to the downside, seeking the low. But what? The entirety of this pullback movement to the downside ends here. And now we have a push to the upside that created this high points. Now we have what? A push to the downside, a pullback that seeked the low of it. Now we have this push again. We had a pullback that would seek the low of it. We have a push to the upside, a pullback that seek the low of this candle that gave the high. We have now words a push to the upside and now a pullback to the downside. So you can see we have what? A pullback to the downside. So this bullish candle give us the lowest low. So this is it. And we have a pullback because this movement took out the high before falling bearish to the downside. And now we have what? Another valid pullback because this is the lowest candle. Price traded against it, seeking the high. Are we together, guys? So this fell, but it is not a pullback. This bullish movement did not create a pullback because the bullish movement did not seek the high of this bearish colored candle. So we have the entirety of the movement to this low point. And now we have a valid pullback here because this seeked this high point. Now we have a push here to the downside and a valid pullback here because this seeked the high of the candle that created the low point here. And now we have what? A push again to the downside. So are you seeing how you identify these pullbacks? So this is how you clearly identify the valid institutional market pullbacks. So if you want to have a clear understanding again further to how to identify valid institutional pullbacks to help you in identifying institutional market structure, then you can do well to get the Smart Money Concept Trading Bible. The link to that is in the comment section and in the description section to this video. As you can see, we've explained in details also about valid institutional pullbacks in the Trading Bible. So you can do well for yourself to get a copy. Till I see you in the next episode. Cheers and God bless you.